So really the ultimate goal, number one, is to get to 1,000 units, right? And so we're moving towards that goal. And the first stage, like anything, you graduate. Some people just say, hey, just go big, right? Okay, but you can also make bigger mistakes, right? And so we graduated through the 2 to 4 unit space back in the early 2010, 11, 12 through 15. Now we've gotten into the 20 to 50 unit space, and you're starting to conquer that and getting very comfortable with that. And now you move into that 80 to 120 unit space where same process, just more zeros, right? Same process, just more zeros. And we're very much now comfortable because of all of that detail. And that's everything that you can imagine setting up, right? So what we did before we go into any market is I'll go out about 6 months in advance, right? And I'll kick the dirt, right? I'm getting there, interviewing property management companies, interviewing construction crews, interviewing the area, kicking the dirt with the tenants, walking the facilities, knowing all the stuff, all the details, getting all the brokers lined up for the deals. So that way all the logistics are ready to go. So that way when we find deals, boom, you go and the light bulb's on versus having to feel like you're scrambling. And then we set up all the legal logistics behind, from the property or the private placement memorandum, all that, legal paperwork, the accounting side of it, the fund management, right? All of that stuff gets set up in advance. So that way, once deals happen, we're actually ahead of it and not having to play catch up and scramble. And that's really helped us with the organizational side of things. And then attracting investors, because at the end of the day, investors just want to, they got to like you. They got to trust you. They got to know that you're not going to take their money and run off and do some weird stuff. You're going to do what you say you're going to do.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. And today we have Justin Brennan. Justin is the co-founder of Brennan's Co. I apologize again. I was going to leave that part out there. I'll redo that there. So 1 second here. I got to update my notes. Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. And today we have Justin Brennan. Justin is a realtor and developer in La Jolla, California. Justin, thank you so much for joining us on the show. And how you doing, my friend?
I'm doing well, man. Considering the times, we're doing all right. We're hanging in there, man. We're just trying to support everybody that needs it.
Exactly. Yeah, we're always here trying to bring in some, positive vibes, give some good information, good content for people who are looking to build their business and just kind of take their investments to the next level. But one thing that's really interesting learning about you, we talked a little bit pre-show and on the phone last week, talking about your business and kind of like your plans, and you being in the California market. I'm over in Connecticut. So it's always good talking to real estate investors in different parts of the country and seeing what's different and what's being done out there. But before we kick things off, would you mind sharing a little bit about your background and how you got started in real estate?
Sure. Yeah. Thanks for asking, by the way. Born and raised in San Diego, so not too many complaints with the weather. Kind of born to a essentially third generation developer. My dad was in it. My grandmother was in it. So from the real estate investing side, mostly in the multifamily business, from condos to apartments, some single family development, but grew up in it, right? Laying pipe on my dad's job sites as a young age, and then kind of grew through that and, transitioned and doing some real estate sales side of things. And then really using that as a catalyst now to reposition money to buy apartments, develop, build, do those things to where at some point the sales game won't be needed because the income will be replaced, right, through the investment side of things on the passive income.
Awesome. And as far as kind of your marketplace, what are your areas that you focus in? And then we'll kind of talk a little bit about kind of the characteristics of that marketplace.
Yeah, so from the sales side of helping buyers, sellers, investors on the residential sales side, it's San Diego along the coastline, but anywhere in San Diego County. When it comes to the investment side, we bought some properties really in the 2008, 9, 10 financial crisis. We bought some apartment buildings and we're holding them. We haven't done anything, just holding them, value add, sit tight. anything now in California doesn't make sense for us from a financial
Mm.
perspective. It just doesn't pencil. So we've taken money and positioned it outside of California now and expanding into areas like Missouri, Texas, and Arizona. And that's some of the sub-markets, tertiary markets that we've gone into.
Mm. Yeah, that's very interesting because on my brokerage side of my business, I deal with a lot of kind of coastal investors that are looking at other different marketplaces. And in some places in California, it does make sense because like you mentioned, in pencils, but as far as kind of pricing and trying to do add value add type of properties, it just kind of tough to make sense. So those other markets that you're looking at right now outside of California, what are the kind of stuff that you're looking for? I know obviously, job growth and economical data, but is there any other characteristics that drew you guys there to make it more attractive?
Yeah, so everybody says, the emerging markets, right? They that's what they're looking for, and how do they classify that emerging market? So areas like Kansas City, Missouri, right? That was one of the first places
Mm-hmm.
out of California we went into. And the reason we went in there is for a few things, right? Population growth, right? Jobs, right? And how are those jobs made up, right? How is that industry? Is it well diversified? So in Kansas
Exactly.
City, you got the healthcare system, 9 Fortune 500 companies. There's a lot of transit coming in and out of Kansas City because it's pretty centrally located in the middle of the United States. There's 41 different university systems and colleges surrounding the Kansas City proper. So you have that university education, right, which then pushes wages, and all these other dynamics happen that we're looking for. And it's at a point where it's growing so rapidly, and it reminded me very much of San Diego back in 2003, 4, 5, where it was
Mm-hmm.
starting to spawn. You like watched it, and you're like, oh my gosh, like if I would have only known. So now I see that, and I'm like, oh my gosh, we need to get ahead of it, because they have things called Path of Progress, where they're
Right.
redeveloping sectors of downtown Kansas City all the way down through the plaza and university systems.
Mm.
And seeing that development and watching it come through from mass transit systems, light rail systems, all these things, we went in, we bought some properties sitting around these areas, and lo and behold, here comes all the redevelopment right in front of us, and boom, 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 boom,
Wow.
boom, right?
Mm-hmm.
So it's understanding that it's not just what the market is, it's what it can be, and then getting ahead and seeing, okay, what is the master plan for Kansas City area and the areas you're interested in, right? What are they doing from a development standpoint? What is the city, right, in those areas looking to do for redevelopment in the future?
Mm-hmm.
So that way you can maybe sit in some of those areas of Path of Progress.
And for your guys' experience dealing with single and multifamily, are you guys kind of looking at those similar type of assets, or you guys are looking at like 50 units above, or what's kind of like your business model?
Initially, we went out and 20 to 50 units in Kansas City were the building sizes, and we were looking at C plus to B minus properties where we could
Mm-hmm.
then turn them into solid Bs,
Wow.
right? And move them through adding washer dryers, laundry in the units, sprucing them up, doing internal improvements as well as some exterior value add to the apartment buildings, and making sure that where we were at and where we could go, the rent growth could happen, right?
Mm-hmm.
And those are the little dynamics you look at before you're willing to go into a market. So, but yeah, I would say it's B and C type properties surrounded by A's, I like to call it. I mean, I
Mm-hmm.
kind of like to be the Walmart, the Target, surrounded by Neiman Marcus, Nordstrom, and JC, all those kind of guys. Because regardless of markets, right, you get into tough markets like right now, perfect
Mm-hmm.
example, right, where some of the A properties that have those super high rents, those guys are starting to struggle a little bit, where they have a higher number of tenants not able to pay due to COVID and some other
Exactly.
things. Whereas for us in the B type properties, we're actually only seeing about a 10% of our tenants having problems right now.
Mm.
So we're able to work with those folks, because what's happened is people in the A's who can't necessarily afford the A's anymore, where do they go?
Down to B's and
They
C's.
move to
Yeah.
the B's,
Yeah, exactly.
right? So, I mean, in tough times, people shop at Walmart, and Walmart's always full,
Mm-hmm.
regardless of good market, bad market, right?
Exactly.
So that's why we like to be Walmart surrounded by the other guys.
Are you guys more, like the type of projects that you like? Or you guys like would be willing to do like heavy lift type of value adds? Or are you guys looking for more cosmetical stuff? I know depending on the marketplace and depending on the type of tolerance of the investor, but what fits in your guys' bucket?
Yeah, well, in San Diego, because it's close to home, if you're going to do any kind of ground up development, is we know how challenging that can be, and you got to really have good eyeballs on it.
Mm.
We'll do it locally, right? And development still does make some sense in California if you can get the land right. Outside of California, we're buying existing properties. So they're in place. We're doing value add. Most of it is cosmetic for the most part. We're not building new buildings and doing any kind of ground up. It's mostly exterior facade, interior renovations, stuff like that.
And as far as kind of like, are you guys like tackling any existing projects right now? I know I've talked to investors in different marketplaces. I know Connecticut here, we had a big, slowdown as far as like construction permits and different things you can go out and do. And of course, like the social distancing, regulation per specific state. What are you guys seeing in both in California and the other markets that you guys are looking at?
Yeah, so in California right now, we're in the process of entitling for permits, 19 apartments, ground up construction. Hopefully by the end of this year, we should have permits on it and be able to make a decision to build in the first quarter of 2021. So that's where that one's at, and that's still continuing. Externally outside of California, we're still rehabbing the units. That's moving all through, even with COVID. Obviously, we had to add some additional protocols and stuff in place, but all that value add still in place. It did slow down for about a month and a half as everybody had to stay at home.
Mm-hmm.
But as things start to open back up, all that stuff's starting to move again. We are seeing a challenge with getting contractors because they're so busy, because everything kind of, this pent up demand.
Exactly.
So getting them back on site is in a timely manner is a challenge, but we got to work through it because everybody's in the same position. Unfortunately, everybody's in the same spot. We just got to work together.
Exactly. Yeah, I talk to a lot of operators throughout the country, and I always kind of ask them the same question as far as like kind of definitely through COVID-19, kind of like the crisis and stuff, like how are they kind of managing the investments? I know, one of the big takeaways I got from a lot of investors is communication, especially if they're dealing with stakeholders, investors, but also the tenants and the property management team. How have you been handling it? And, any tips for any of the listeners that may have similar issues?
Yeah. So what we did, which I know helped a lot, and you hit the nail on the head with the communication side of it, is in late February, early March, I kind of saw it coming in terms of, we're going to have a financial challenge with maybe some of the tenants, as I knew that the lockdowns were going to happen, closing things down, et cetera, et cetera. So I got with, first of all, notified our investors. I said, hey, this is some things we're trying to get ahead of now because come April, we may need to do some things.
Exactly.
But got with our property management companies out there, drafted some nice letters, some protocol systems, operations that went proactively out to every tenant in our building, in all our buildings. So versus waiting for them to come to us, we actually went to them and mailed out to all of them saying, look, if you're financially impacted by COVID, right, you got to follow these protocols. You got to prove, right, that unemployed, blah, blah, blah. You got to prove it. And then we're going to work with you hand in hand in this together to get through this. And what that did for us is actually eliminate a lot of people. There's always going to be people trying to take advantage of it, right?
Mm-hmm.
But the key is the protocol of having to prove it.
Mm-hmm.
And if we follow those protocols, then actually the law's on our side on any state, even with moratoriums. So by doing that, it helped us get ahead of it to force the tenants to work with us, right? Follow protocol and procedure, prove that they're impacted and not just try and say that they're impacted, and work through that. And that's eliminated the number of tenants not paying rent down to a handful. I think I mentioned it's like about 90% of our tenants are paying full rent.
Wow. Yeah,
Yeah,
definitely. That's the biggest takeaway I got from that is, like I said, just being proactive. You guys, you've seen it coming, inform your investors and said, we got to reach out to the property management team, draft letters, reach out and say, we're willing to work with you, but you definitely got to work with us. And of course, with the stimulus and, different state programs and charities and stuff like that assist to kind of, make sure that, things are covered while, things are slowly starting to ease up and restrictions start to, go out. We're starting to see some changes in the marketplace and that pent up demand, and hopefully things get back sooner than later, but definitely being proactive is like that big takeaway there. So appreciate you sharing that.
Yeah. And we'll see what happens, right? I mean, like you said, as things open back up, but it's like, it seems like every other week there's a new crisis, right?
Exactly. Yeah.
I have no idea. We're doing the best we can. We're working through, each week at a time.
And as far as kind of like the future, I know you got your target markets and stuff. Is there? I know that we can't really see because, like I said, the next day there's always something that's happening. But as far as kind of the future, what type of are you guys just going to continue to go with the 20 to 50 units, or are you guys looking at additional marketplaces, or any changes in strategies that you
Yeah,
would have been doing 6 months from now that would have changed?
sure. So really the ultimate goal, number one, is to get to 1,000 units,
Mm,
right? And so we're moving towards that goal. And the first stage, like anything, you graduate. Some people just say, hey, just go big, right? Okay, but you can also make bigger mistakes, right? And so we graduated through the 2 to 4 unit space back in the early 2010, 11, 12 through 15. Now we've gotten into the 20 to 50 unit space, and we've kind of you're starting to conquer that and getting very comfortable with that. And now you move into that 80 to 120 unit space where same process, just more zeros,
hmm
right? Same process, just more zeros. And we're very much now comfortable because of all of that detail. And that's everything that you can imagine setting up, right? So what we did before we go into any market is I'll go out about 6 months in advance, right? And I'll kick the dirt, right? I'm getting there, interviewing property management companies, interviewing construction crews, interviewing the area, kicking the dirt with the tenants, walking the facilities, knowing all the stuff, all the details, getting all the brokers lined up for the deals. So that way all the logistics are ready to go. So that way when we find deals, boom, you go and the light bulb's on versus having to feel like you're scrambling.
mm
And then we set up all the legal logistics behind, from the property or the private placement memorandum, all that, legal paperwork, the accounting side of it, the fund management, right? All of that stuff gets set up in advance. So that way, once deals happen, we're actually ahead of it and not having to play catch up and scramble. And that's really helped us with the organizational side of things. And then attracting investors, because at the end of the day, investors just want to, they got to like you, they got to trust you, they got to know that you're not going to take their money and run off and do some weird stuff. And
hmm
just you're going to do what you say you're going to do. And
hmm
if things aren't going as planned, that's okay, as long as you're honest and you're communicating and you're saying, look, here's where we're at, here's what's going on, here's how we're trying to fix it, and blah blah blah, right? And just be open and honest with people.
Exactly. Yeah, definitely like that approach a lot. And that kind of leads into my next question, because since you're, like I said, key is organization and planning forward and, setting up systems and stuff like that. What's kind of like a typical work day for you? I know that you're wearing multiple hats and stuff like that. What's a typical work day for you? And do you have any special morning routines?
I do have a morning routine. I'm on Peloton at 6 a.m. every morning. I get a 30-minute ride in. It's amazing. I've been wanting to do that for like a year and a half, and I finally did it. COVID helped with that one.
Peloton stock is going through the roof.
Oh
I
yeah,
know
but
everybody got one of those things.
it's incredible. I'm not gonna lie, it's incredible if you stick to it like anything. Follow that with 10 minutes of meditation right after the ride, and then get cleaned up and get the day going. Obviously, got 2 kiddos and all that wildness, so that happens. You homeschooling right now and all that, but
hmm
that'll get some back to normal hopefully. And then I'll start with the residential resale side. I'm dealing with clients in the morning, follow up, prospecting, all of that, getting that done through the early afternoon. And then if deals are coming across the table on the apartment side, I'm usually looking at those late in the evening, right? After kind of that 9 to 5, you would call that primary. Then looking and analyzing deals and stuff like that will be in the evening when I have time to sit down and really look at them and flow through. If I'm handling, some fires as a result of the properties during the day, I'll handle that, right?
hmm
Usually as part of the admin side of my schedule each day, and deal with the property management crews and stuff within about an hour or two time span.
Awesome. What do you can say that you're most grateful for?
My health, that I live in the United States, to be honest with you. It's an incredible country. Despite our flaws, it's an incredible country. Um, my amazing kids. You know, California is a tough state, but an amazing state at the same time. It is true. You pay the sunshine tax out here, and it's
hmm
painful to pay it. But then when you walk by the beach every day, you're like, ah, I get it. Like
Yeah.
that's why people won't leave. Like they got you,
hmm
And yeah, I mean, yeah, health, kids, family, people around me, staying positive. I think it's very easy to go negative every day. It's very easy with everything going on to drop into a hole, but you got to keep your mind going in the right direction.
hmm
I've heard a great quote from some very wise people in life. They said, look, the only thing keeping you from kind of where you're at and ultimately where you want to go is 7 inches. And then people are like, what do you mean 7 inches? I said, well, it's the 7 inches between your ears, right? You got to keep this in line and right mentally, because that's ultimately what's keeping you, right? Because your mind tells you some crazy things. Mm-hmm. It's very easy to allow yourself to go in a certain direction and get in ruts. So you got to be willing to pull yourself out. Mm-hmm. and know you almost got to trick yourself in a way, mm-hmm. right? Even if you start to have negative thoughts or negative this or negative that, you almost need to trick yourself and get yourself in a positive mindset, even if you got to slap yourself across the face a couple times, because that 7 inches between your ears is critically important if you're going to have success in life in anything, right? Mm-hmm. Whether it's your health, your family, personal life, or of course the professional side of things. You got to keep the head in line, and it's a battle every day. So if anybody tells you, oh, I got to figure it out, no, you don't. You haven't figured it out today, maybe.
Exactly.
But tomorrow's a different day, and you're going to have to do it all over again. So don't fool yourself. It's a battle every day.
Absolutely. Yeah. Appreciate you sharing that. Definitely some good tips there. So I'm going to put all in the show notes, folks, Justin's information. Would you mind sharing what information you want to share with us so we can get in contact with you?
Yeah. If you have anybody that's obviously looking to buy, sell, or invest in Southern California, San Diego, you can reach out to me. Obviously, you can Google my name, Justin Brennan. I should come up there with our websites and stuff. You can give me a call as well. I think that'll be in the notes. Love to help be a resource for anybody that's kind of looking in Southern California on the real estate side. And then, also love to be a resource if, I've had people reach out that have questions that are new to investing, right? And they're kind of trying to grow or follow a path. I'm a library. I'll give everything I have. I don't want anything for it. I just want to provide information for people, watch them grow. And that's kind of my, way of helping, I guess you'd call it that.
Awesome. Well, Justin, it was a pleasure speaking with you, and I really appreciate you taking the time with us and sharing, like I said, your business and the growth of the different marketplaces. We definitely learned a lot, and look forward to that. And again, we look forward to connect you again soon. Have a great week.
Thanks, Dwaine. I appreciate being on the show. And if you need anything, let us know. We're here.
Absolutely. All right. Take care, my friend.
Thank you.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.